Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Intel gets $2 billion from SoftBank as the US government confirms discussions to take a stake in the chipmaker. Plus, Palo Alto Networks gives a strong forecast for the cybersecurity giant. Our conversation with the CEO, Nikesh Arora. And Apple expands its iPhone production in India as it seeks to lessen its reliance on China. But first, I shine light what's happening with ARM as well, because the news was that SoftBank is taking, $2 billion in an equity stake. They're going to be selling new shares. SoftBank's going to be having them. Remember, SoftBank, of course, in many ways controls ARM, the chip designer. But we're thinking also about the US government, which does indeed confirm that they are eyeing a stake for the business. We're wondering just how much. And I'm pleased to say that we can dive into this with Michael Shepard, of course, Bloomberg's executive editor on all things to do with technology and Washington. And boy, is Washington playing a bigger and bigger role at the moment. Commerce Secretary Lutnick saying, yes, we're involved in talks, but how much equity, Mike?
Well, it's a great question. He stopped short of saying that it would be the 10% stake that our colleagues scooped and reported yesterday, and it gave a size and scope to what we had broken earlier over last week, and that is that the government had been weighing this investment in the company. And the idea is to take some of the CHIPS Act money, and those are funds and subsidies, Carol, that we have talked about on these airwaves so much over the past year and a half, but they would take that money and turn it into equity, hand stock over to the government, and that would make the federal government the largest holder in Intel, which would be an extraordinary step, especially in the tech space. And it would also provide something of a lifeline to this company as the new CEO, Lip-Bu Tan, tries to turn it around after inheriting from Pat Gelsinger, his predecessor, a company that was really at a crossroads.
Really at a crossroads. Lip-Bu Tan now has to almost try and weave a narrative that's got pretty confusing. For the government, they care about manufacturing in the United States. They care about Ohio an awful lot. They care about innovation, and that almost felt like something that Lip-Bu Tan was pulling away from, and certainly in terms of the latest and greatest innovation with 14A processors, but they couldn't find demand for it.
Well, Carol, you hit the nail on the head right there. There is such tension between what Lip-Bu Tan was going to have to do with the turnaround, with the goals of the administration, which, as you said, is to try to stoke more domestic manufacturing, especially in the advanced technology space and semiconductor space. And that factory in Ohio we've talked so much about has now been pushed back till the 2030s. And that's not a timeline that the Trump administration would accept. The rub, though, is that Intel just doesn't yet have the customers to be able to sustain the factory build out there, which is so costly and would involve such continued investment by the company. It needs a guaranteed revenue stream from those buyers of chips to be able to make that work. Now, one of the questions is, would the government try to cajole some other tech companies into buying chips from Intel to help it find that customer base as it seeks to move forward? We heard from Treasury Secretary Scott Bessent this morning saying that no, the federal government would not get involved in trying to find those customers. But we'll wait and see. The president is very much interested in trying to see Intel succeed. He had a very positive meeting with Lip-Bu Tan about 10 days ago, and this was just days after suggesting that the CEO might have to leave over his prior ties and engagement with China. So we are seeing a bit of a turn of fortune between not only the company and the government, but really the company and its CEO with the president himself. I
mean, Link Secretary Strategies, Mike, called this monumental the last couple of days, in their view, for Intel. What I think is really interesting, though, is not, aside from already the investment they're managing to push from SoftBank, for example, into Intel, but whether other companies that have taken CHIPS Act money might see that turn into an equity investment too. That seemed to be what I was reading between the lines of our reporting. Well, Micron's taken money, but how could that possibly work for TSMC, Samsung?
We are seeing in between the lines of those reporting a sense among some White House officials that they would like to perhaps take it a step further with those other companies, perhaps including the ones that you mentioned. Now, with a venture like Micron, perhaps because it's U.S. flagged and U.S. based, sure, maybe that could work. But then Taiwan and TSMC, how does Taiwan Semiconductor Manufacturing Company and the Taiwanese government and leadership accept something like that? And Samsung and the government in South Korea. There lies some greater sensitivities, even as those governments have come to embrace the need to diversify the location of their manufacturing and to also curry favor with Donald Trump by investing in the U.S. There may be a certain line when it comes to the equity stakes, Carol. So we'll have to see how that plays out.
Bloomberg's Michael Shepard with the inside track of what's happening in Washington. We thank you. Let's turn to, well, the analysis on the street now for Intel and the read across to the sector. Gil Luria is with us, head of tech research at D.A. Davidson. Is this a good thing for Intel?
It's a lifesaver. They were on an unclear path before the government decided to renegotiate its deal. Let's not forget, the U.S. government already had a deal with Intel. It's, we're going to give you $6 billion, and we're going to get a colored profit share down the line. What this administration is doing is just renegotiating the deal. It's saying that's not good enough. We want to take an equity stake. And by the way, Intel is different because part of this deal is a big Department of Defense component. Let's not forget, we're going to want Intel to manufacture chips for our F-35s and other important weapons systems. So the government has a different type of relationship, for instance, than it does with TSMC, where we're just talking about making chips for data centers. So the government renegotiated the deal, and now when it's done that, it's not a coincidence that Lip-Bu-Tan can go to his friend Masasan and say, okay, this is the time for SoftBank to invest as well, and maybe line up some ARM demand for those 14A chips down the line.
I'm so interested in the ARM architecture side of this. How do you see these working hand in hand going forward? How more cemented could a relationship become?
Well, clearly it could be part of the deal. And more importantly for Intel, as of a week ago, they had no customers for the 14A architecture, and they said they may not even proceed with it. Now they might have one lined up. Let's not forget the Department of Defense is a customer. That's now more likely to be lined up for that. And then they can go and talk to the other companies. And even if the government doesn't go ahead and twist some arms, let's not forget, NVIDIA's committed $500 billion of investment in the U.S. So can the government now, can President Trump call Jensen Huang and say, hey, this is part of how I want to see the investment play out. I need for you to be a customer of 14A. That's not inconceivable at this point. Again, remember, this is national security. So the rules of the games change once we say this is national security.
The rules of the game are often blurred by frenemy lines, Gil. And what's so interesting is Masa has had a long-term relationship with the CEO of NVIDIA, of course, Jensen Huang, but also in some ways wants to build a competing architecture in some ways, wants to take on NVIDIA in terms of AI chips. Could he do that with Intel's help?
It's one way for him to participate in an even more broad fashion in the growth of AI, which he's doing now. He regrets selling NVIDIA when he did. He's buying some of it back, but he's also making a set of other investments in AI infrastructure. Let's not forget Stargate is probably the flag bearer of his effort, combining with OpenAI and Oracle to build, again, at least $100 billion worth of data center capacity. And for that, it would make sense to diversify and not only buy NVIDIA chips. Now, that's going to take a while. NVIDIA not only has a lead, but continues to extend its lead every year. But it does make sense for him and for other companies to try to diversify away from NVIDIA.
What's interesting is Howard Lutnick, the Commerce Secretary, had said, look, we confirmed that we're looking at taking an equity stake, didn't say how much, but it wouldn't be with a governance role. Now, more broadly, how are you starting to analyze companies that are getting closer and closer to the US government, and how much, well, is it interference or is it positive help that is being lent by a US government here?
Well, the U.S. government has an ability to give preferential treatment to some of these companies, to change the rules of the road, and it wants equity participation when it does that. And again, it's not doing it broadly; it's doing it when it's a matter of national security. Let's not forget, it's already very involved with NVIDIA. It's limiting their chip sales to China. It's already very involved with OpenAI. This may be quiet, but it's pretty safe to assume the Department of Defense gets briefs from OpenAI very frequently about where the models are. So the government is involved because it's national security. In Intel's case, it's a matter of, if this is this century's nuclear arsenal, we need somebody to make the shell casings domestically. We can't have a Taiwanese company and a Korean company make our shell casings for our nuclear arsenal. So in Intel's case, it's a much deeper involvement, and I wouldn't be surprised if there is input into where the investments go, what the governance is, even if it's not explicit.
Something that Bloomberg will seek comment on. D.A. Davidson's Gil Luria. Thanks so much for the analysis today. Meanwhile, coming up, we hear from Palo Alto Network CEO Nikesh Arora as the company sees a stronger than expected 2026. This is Bloomberg Tech. Shares of Palo Alto Networks rising, in fact, best day since April. That's after posting a stronger than expected forecast for 2026. We caught up with the CEO, Nikesh Arora, earlier. Here's what he had to say about the growth.
The industry's got too many fragmented players where the customers are left to do the stitching on cybersecurity themselves. And now the pace at which attacks are happening, the pace at which the bad actors are able to get in and exfiltrate data has shrunk to 25 minutes. You can't solve that problem with humans. You have to apply technology. You have to apply automation. You have to apply AI, and that's where platformization comes in.
You talk about the pervasive attacks. I mean, you apply Gen AI to tackle, ultimately, attacks coming from Gen AI. I think you had phenomenal statistics in the call. 890% increase in Gen AI traffic in 2024. Can you just talk to us about how you can combat that? What sort of things you need in place to be able to take on the Gen AI impact?
Well, look, as we're noticing everywhere, as AI is getting deployed, the fundamental problem that every company is facing in deploying LLMs or AI effectively is they don't have good data. You need good data on drug discovery. You need good data on self-driving cars to understand where every tree is, where every plant is. So you need good data to solve the problem if you want to use AI. And what we have done at our end is we have basically built a platform that ingests or collects all the data from the enterprise and makes sense of it as fast as the bad actors can. Now, that can't be done with humans. For example, in an instance for ourselves, we ingest 150 terabytes a day. That's a lot of data. And that's just for ourselves. And imagine doing that across 400 customers. We're ingesting data in petabytes, analyzing it on the fly, and trying to stop an attack midstream. That requires tons of technology, tons of AI expertise, because the consequences are disastrous, right? The bad actors are doing that, but they're trying to get it right once. We have to get it right 100% of the time.
Okay, so the expertise that you need, you've had organically, but also some inorganic expertise coming on when I think about the identity focus that you now brought on with CyberArk. It's a deal that, of course, will be folded in the longer term.
I don't know. You guys like to call it inorganic. When you hire great people, that's possibly called inorganic, isn't it? Like when Meta goes and hires AI researchers and people hire people, that's inorganic. Yes, we have to get great people from elsewhere because we don't have, the prerogative of having best people on all the time. So yes, we buy great teams who are doing great work.
For $25 billion. This is a $25 billion acqui-hire.
Well, we can't get there the way we got here, so we're going to have to make sure that we go ahead. It's not just acqui-hire. It's amazing technology. It's a great bunch of people. And honestly, I think the way to frame it, Caroline, is if you listen to all the narratives I hear in Bloomberg and around in media, we're all worried about agents. We all believe that agents are going to take over the world. We believe there are going to be more agents in companies than there are going to be humans. Now, well, somebody's got to make sense of these agents. Somebody's got to make sure these agents have credentials, they're managed, they're understood, they don't run rogue, they have guardrails. That whole world of agentic AI needs a whole cloak or framework of identity management around them. And CyberArk is the world leader in this topic. So partnering with them, making them part of Palo Alto Networks, allows us to see ahead and say 2 years from now, 3 years from now, when the world is talking about how to manage all these things, how does Palo Alto get ready and be at the forefront so our customers can solve their problems on deploying AI while we help them with security.
What sales synergies do you see in that 2 to 3 years? How do you ensure that you don't get a hit to that margin that some were worried about?
Look, we are as the first at-scale cybersecurity company. We crossed a $10 billion revenue run rate. Never been done in cybersecurity. That allows us to leverage scale economics. We run at a 30% operating margin. We run close to 40% free cash flow margins. We are a robust, profitable company. Any company that is in a $1 billion, $2 billion ARR business, which is where CyberArk is, we think we can vastly improve their operations as part of Palo Alto because of the scale economics that we bring, both on the go-to-market side, we have 10 times the sellers they have, and on the operating side. We run large-scale systems for 16,000 employees. Adding 6,000 employees doesn't take a lot, but it does improve the margins of the underlying business substantially. So we believe that the acquisition will be accretive over time. We believe in FY28 we can collectively achieve a 40% free cash flow margin, which again is gold standard in our industry, let alone our industry in software.
Palo Alto Networks CEO Nikesh Arora. The AI industry's massive funding needs are being seen as an opportunity by private credit firms. For example, firms competed for months to lend Meta $29 billion for its AI data center project in Louisiana. Now, PIMCO and Blue Owl Capital eventually selected there. Bloomberg's Laura Benitez joins us. She covers asset management. You've been reporting on this a lot. And just remind us why private credit is really salivating at the opportunity here.
There's a huge opportunity within AI. Unlike private equity, which we're seeing, some kind of logjam with exits, there's big opportunity with infrastructure and digital infrastructure. The margins can be quite high. The coupons can be very lucrative. So yes, it's a piece of the pie that everyone's trying to get in on right now.
They get in on Meta, there's opportunities to come. I was just looking at a note put out by UBS, so they almost worry that perhaps this is getting too much. The froth starts to appear, the risks start to appear. Is that something you're hearing, Laura?
That's right. There are some concerns that, there's too much money chasing this opportunity now, and that it might be overblown. And demand, seems to be, apparently soaring, but I think, kind of a bit skeptical on that in the long term. But you're right, Morgan Stanley have said, for instance, that there's, trillions of capital expenditure needs for AI in the next few years, and that could translate to hundreds of billions of bond issuance coming into the bond market. So again, huge numbers here. 3
trillion in the next 3 years is the number that Morgan Stanley was estimating. It is eye-watering. A lot of it is US denominated. Just tell us where on the risk spectrum actually this lies. Is this what would be deemed investment-grade debt more broadly? Because these companies are, awash with cash and very bettable against, and many see the demand is there for these AI data centers.
It's a good question. The vast majority of what we're seeing could translate into investment-grade issuance, primarily because of the tenor. So the maturities of these debt instruments are very, very long. That allows companies and issuers to get an investment-grade rating, and also they're backed against hard assets. So you've got more collateral there. Should things go wrong, you've got more security to negotiate with.
Well, banks cut out, private credit swoops in. PIMCO a big winner here. Bloomberg's Laura Benitez. It's been great speaking to you. Thank you. Look, elsewhere in AI, let's talk about regulation. Last year, California Governor Gavin Newsom, remember, he vetoed an AI safety bill. But lawmakers actually pledged to take another swing at the regulation. Here's State Senator Scott Wiener speaking with us after the veto.
California, as the heartland of tech and AI innovation, has a responsibility to lead on AI safety.
Titus Wu, he covers California politics for Bloomberg Industry Group. And you're joining us now because, look, there are multiple AI and tech-related bills in front of lawmakers in Sacramento. But I thought this is exactly what the administration doesn't want, a patchwork effect, a state-by-state AI regulation future.
I would say, thanks for having me on, but I would say that, Governor Newsom doesn't necessarily say that he didn't want any AI regulation whatsoever here in California. If anything, in recent months, given that, on the federal level, we saw them try to implement a 10-year moratorium on state AI laws, that, Newsom has said that he's felt that California has to lead on AI regulation. The question is, what is Newsom's preferred approach at regulating it, because clearly, last year with SB 1047, that was not how he wanted to see it. And right now, lawmakers, they're trying again, and they're trying to suss out and read the tea leaves as to what the governor wants, what kind of regulation, what's the middle line in which the governor would say, okay, this supports innovation, but also advances some sensible regulation.
So they're thinking about AI developers testing their tools against bias, for example. That's in the AB 1018. This isn't just the only area of regulation that might oversee AI, right? We're also thinking about how big tech, in many ways, is lobbying against what's SB 53. Can you talk us through that one, Titus?
Yes. So SB 53 is basically Senator Wiener's kind of second attempt after his 1047 got vetoed. It's definitely a lot less I'd say restrictive than 1047. It focuses mostly on kind of disclosing safety and security protocols for AI developers. There's whistleblower protections. There's third-party audits. You have to report a kind of safety instance to the state AG. So it's definitely not as intrusive as last year's 1047, and it's trying to pick up on some of the recommendations from this working group formed by this group of experts that the governor formed after his veto last year.
And very briefly, worker rights against automated tools. That seems to be contentious.
Yes, definitely. Labor forces in California, they're really powerful political force. This year they're getting more in the weeds into trying to put in comprehensive rules around AI in the workplace. SB 7, it's very, very intense bill where labor and tech, they're fighting with each other in the Capitol over it. Basically, that bill would give workers rights to kind of opt out, potentially refuse decisions by employers when they use AI, for instance, to make termination decisions, disciplinary decisions, and it had big consequences for employers across California.
Titus Wu, California correspondent for Bloomberg Industry Group. Great to get your insights. Thank you. Welcome back to Bloomberg Tech. We're all thinking about what the US government means for Intel ownership, how much. They confirm that they are indeed looking at taking a stake. What size of stake is still under question, how we see a change of grants, money lent in the CHIPS Act into equity, and what SoftBank's now getting in on the game for. We're up 7.5%. Let's get over to London, where Peter Elstrom is with us, executive editor who used to oversee, of course, you're looking at the technology news for us, more broadly, a big expertise in Asia. So I go to Asia first. I ask you why SoftBank is taking that $2 billion stake. Why are they getting Intel to sell more equity to them?
Yeah, there's a lot going on here with Intel, but on the SoftBank front in particular, the founder, Masayoshi Son, has had ambitions in the chip area for a long time. He bought ARM Holdings, of course, the chip designer that's commonplace in all sorts of smartphones, and he has ambitions to be able to compete in AI chips against NVIDIA in particular. They think that they can use some of those designs from ARM to make a much more energy efficient chip that could compete with NVIDIA's chips, particularly for running some of these AI services like ChatGPT in particular. So the idea that SoftBank would put $2 billion into Intel gives them a stake in the company that could be important, perhaps as an investment, but also if Intel is able to develop its foundry business that is making custom chips for other kinds of companies, you could imagine a day when Intel makes AI chips for SoftBank and is able to sell those, and both companies would be able to benefit from taking some of that demand away from NVIDIA as this AI boom really explodes.
And when we think about the foundry business, when we think about manufacturing, that's where the US government wants to lean in. They want domestically made, manufactured chips that ultimately gives them control over the supply chain. But we're hearing from Howard Lutnick that he doesn't want control over Intel in any way. They don't want a governance role here.
Right. Yeah, you make a good point. The U.S. government has wanted to rebuild the domestic semiconductor industry for a number of different reasons. Partly because it's a growth business. It could mean some jobs and some profits for them. But also they don't want to have the strategic risk of having all the advanced semiconductor manufacturing in the world in East Asia, in Taiwan and South Korea in particular. They want to be able to bring that into the United States. And Howard Lutnick alluded this today when he confirmed the nice scoop that we had yesterday about how the U.S. government is looking at taking this 10% stake in Intel. Intel. Intel, of course, is really the last major U.S. chip maker standing that has a shot at being able to make those most advanced chips to be able to compete with the likes of TSMC and Samsung in particular. So Lutnick is saying, hey, we may use this CHIPS Act money to convert into equity and then take this 10% stake within Intel. And he's also suggesting that they may do that with some of the other companies that are supposed to be recipients of the CHIPS Act money.
One of them being Micron, for example. You wonder where on earth that would sink in with a TSMC and Samsung. They've also taken CHIPS Act money, Peter. But what's really interesting is whether this gets you the end demand. The reason Lip-Bu pulled back from 14A in many ways was because he was like, I don't want to be that person who just builds it in hopes that they come.
Yeah, this isn't free money, to be clear. Under the Biden administration, they allocated these CHIPS Act awards. Those were supposed to be grants. This was supposed to be money that was coming in anyway. There was no talk about these companies giving up equity to be able to get those billions of dollars. So the Trump administration is trying to change the calculus here, where they still will give you the amount of money that you were supposed to get from the CHIPS Act, but in place, you're going to have to give them some equity in the company. So it's not free money. It may be a little bit accelerated from what the original vision was for the CHIPS Act. Intel, for example, may be able to get that $10.9 billion that they were supposed to get a bit sooner, but still, it's not free money. They still have to go out there. They have to prove that they can succeed in the foundry business. And to your point, then they need to go out and get customers. The U.S. government can do a lot, but it can't get Intel customers for that foundry business.
Peter Elstrom, always so articulate, unlike me just then. We thank you. Let's bring in Swissquote senior analyst Ipek Oskardeshka for more, who I ask you whether this changing up of the calculus is actually what global investors want to see. How difficult is it to calculate what the US government's going to do next?
Well, it's very difficult indeed, because the speed at which things are coming, some news are usual, some news are unusual. So the speed at which things are coming to investors' attention is just went out of control. And some of the news do have positive implications for companies, but there is still the risk that the US government's goals are not going to be always aligned with business objectives and the company's primary goal of maximizing investor value. So the risks are building.
Risks are building. Does it put you off the generative AI tailwinds more broadly, though, that we've seen? Let's go back to previous weeks with NVIDIA and AMD becoming in the eye of the political storm and having to pay 15% if they're going to sell into China, for example.
So that's very interesting, because if you look at AMD and NVIDIA, today they are in a better place than they were a month or 2 months ago, where they weren't able to sell their chips to China. Today, all of a sudden, they can if they pay 15% cut of their Chinese sales. So this looks like it is good news, but in the short run, it's going to give these companies more revenue. But in the long run, in the medium to long run, we don't know how the news and the US government interference is going to change, whether the changes are going to be positive or negative. So that means that the volatility is higher and the risks are building up. It doesn't mean that the companies will not benefit from the US government support, but it means that the US government will not pursue the same goals that they do all the time. So that, I think, is a risk, and that is it is something that we become quite cautious.
Even though over the last year, let's call it 2 years, basically 7 names have made up nearly all of the equity benchmarks gains. So how does an investor basically hedge against that volatility? Do they stay exposed but start diversifying, Ipek?
Well, diversification is one of the rules that we're just recommending, obviously, because diversifying away from the US equities that have quite high valuations right now towards sectors that do have opportunity to follow up is interesting. Then other clients are looking to buy put options, for example, that are interesting in case there is a sell-off in the market and we start seeing the valuations come down. And there are many things to do, but at the end of the day, what we see is that AI is growing. It is not the AI cake that's going to be smaller, but it is how the AI cake is going to be pieced together that's going to be important. And we think that the international companies are also going for a piece for themselves, and that is actually giving way to opportunities in the international markets now that the US technology companies are valued to perfection.
It's interesting, Ipek, you just mentioned how perhaps you use options to be able to, well, hedge oneself. What many would say is what occurred with Intel is many were using it as a hedge, betting against it to be able to protect the upside that they've been getting from NVIDIA and other areas of the chips market. Was that something that you saw at play? And where else had basically investors looked to bet against to protect other winnings that they'd seen in the sector?
Well, you don't really want to go against NVIDIA and AMD. You cannot really go against this machine. The only thing that you are willing to do is to protect any potential sell-off or any potential drawdown. So in this sense, we think that it is always very important to stay long, and just diversification of the portfolios looks like the way to go for us. We do not really expect to see a sector meltdown or very big change in the dominant position of the US. What we are trying to do is just to diversify a little bit in order to tame the downside risk for investors who are looking to have some international exposure to grow their AI play.
And is that Europe? I mean, I think of ASML, SAP, but not many other AI names leap to the forefront when it comes to publicly traded equities. Is it more of an Asia game as well? Is it thinking elsewhere in the asset pool, not just equity, but maybe debt?
No, you're right. I mean, for Europe, we are specifically looking into defense-related technology plays, and we think that the defense spending is somehow going to boost the technology spending in Europe as well. So we are mostly looking into military and defense technologies within the European context. For China, we are looking at the AI plays. We are looking at the foundries and the chip makers like SMIC, for example. Same thing for South Korea. We are watching very closely Samsung, but especially SK Hynix. So there are some champions around the world that are willing to take a piece of that cake and that are looking interesting and that have not seen enough exposure so far because they have remained mostly under the cloud of the US big technology giants. And we think that there's still opportunity there and there's still reason to think about diversifying there.
Ipek Oshtekeshkaya, we thank you so much for Swissquote. OpenAI, well, it's launching a new subscription tier exclusively in India called ChatGPT Go. And the plan will use its latest GPT-5 model at just $5 a month. Now, the plan would allow users to generate more images and interact with the chatbot more frequently compared to the free version. The latest tier will be in addition to its other paid plan offerings, including ChatGPT Plus, which costs $20 a month. Now, sticking with India, Apple is expanding iPhone production at 5 factories in the country. Look, it's a move aimed at lessening the company's reliance on China for US-bound models. Let's bring in Maribel Lopez, founder and principal analyst at Lopez Research. And Maribel, what was so interesting is this brought the ire of President Trump. He was frustrated that Apple was doing more of its manufacturing in India, shifting from China. He wanted it in the US. But has Tim Cook done enough, therefore, in the United States to offset this?
I think Tim Cook eventually will do enough in the United States to offset it, but today the answer to that is no. And it's not unexpected that they moved this to India. They've been working with India since roughly 2017. So it takes a long time to build manufacturing. So you just don't go in, no matter who you are, president or not, and say, you're going to build tomorrow. It takes time to build factories.
It takes time. So how much do you think ultimately will be sourced from India into the United States? Is it only going to be iPhones and other accessories?
Well, I think we're starting to see other plants come online in the U.S. For example, in Houston, when we look at what they want to do with Apple Intelligence and servers for that, they are building that, and that's coming online in 2026. So that's an example of some of the products that will be built here. But the iPhone manufacturing, I expect that it will take several years to get up and running any major significant U.S. presence. And this is part of the reason why there's roughly $600 billion earmarked towards creating manufacturing in the U.S., and that comes in many different forms. Part of that will be for servers, but you have to envision that part of that will also be for iPhones.
Let's talk about what's happening here in the United States, because today we understand that Apple is unfolding its academy. Like, this is all about training here in the United States. Who exactly is it for, and what production could that ultimately lead to here?
So one of the things that we have happening right now is AI is very complicated and businesses actually don't know where to get started. So the concept behind the Apple Academy is for small, medium businesses to understand effectively what they need to know to build next generation manufacturing, which will be highly AI driven. So that is going to be a multi-day program that small and medium businesses sign up for. They currently have a wait list at this point for the next wave of that. They will be running those courses throughout the year. And then once you've gone through the course, there's an opportunity to discuss more detailed discussions about what kind of products and services you need with Apple engineers that can help you do something that's more specific to your organization. This is to fill a skills gap. You know, we have plenty of education programs in high school and above to try to bring in new employees. But if you're actually a business running it today, especially a small, medium business, there's very few options for you. So this is both an opportunity to educate these small businesses, but then to also put them in the pipeline to buy Apple products and services moving forward.
Really interesting that you talk about this as the skills gap. Prior to this, of course, President Trump has talked a lot about the production gap and where he wants to see that rectified. Just take a listen to what he said in August the 6th.
We're doing these things now in the United States instead of other countries, faraway countries. This is a significant step toward the ultimate goal of ensuring that iPhones sold in the United States of America also are made in America. With the mass infusion of capital it's announcing today, Apple will also build a 250,000 square foot server manufacturing facility in Houston and invest billions of dollars to construct data centers across the country from North Carolina to Iowa to Oregon.
Maribel, you so thoughtfully put us right on the medium-sized businesses that really have nowhere to go when it comes to upskilling and being able to facilitate production. What is it that Apple brings by training? Because really the anxiety for Tim Cook has been they haven't got the tooling engineers in the United States that they have in China, that they have in India. Is that what he's going after longer term?
I think yes is the short answer, but it's actually a very broad field. When you think about what we're moving into moving forward, there's been a lot of discussion of physical AI and robotics, and a lot of that will be in manufacturing, and it could be for iPhones, it could be for automotive. The reason that they picked Detroit is not lost. It's a manufacturing culture. There are companies there, but we are running into this gap where these organizations don't have data scientists. They don't understand machine learning, as an example. So we're starting with things that is, on the AI side, machine learning, which is a basic way to start, and then moving that forward. So these are short courses. The Apple engineers that are there are actually basically doing rotations to spend some time helping the small, medium businesses, but they're also still doing their day job. So there wasn't a net new investment in terms of employees, but there is a net new investment in terms of getting organizations to understand what is required for them to participate in the next generation economy. That's stage one.
Well, alongside that stage is what companies are listening to in terms of what's needed in terms of manufacturing here in the US on the most sophisticated chips. I turn our attention to what's happening with Intel at the moment. I mean, we just heard from President Trump on August the 6th what he wants of Apple. How do you make of the stake that they might take in Intel?
I think we really were in the situation where the concept of a U.S. chip manufacturer was almost going to go away. There was just so many discussions about what would happen to Intel. And I think the U.S. government's saying, we're going to step in, we're going to take an equity stake. Some of that CHIPS Act money that we had talked about in the Biden administration, that was actually going to go away. It's actually now coming back. And the context of how that comes back, if you look at it as an investment, an equity stake, it is really to try to create confidence in Intel as a longstanding player, to take away that risk. Buyers do not want to invest in a chip company where they think there could be risk. These are multi-year deals that we're talking about, plans that I talked to you today about something I want to have come online in 3 years. If I don't think you're going to be there in 3 years, I'm not calling you. And so part of this strategy is to take away some of that risk, to give Intel a foundation where they think they can execute on the strategy that they need to execute on without it all being at the whim of how does the market feel about you.
Maribel Lopez, founder and principal analyst of Lopez Research. Fascinating to catch up with you. Let's get back to Intel. The government confirming that it is in talks with the company to acquire a stake in the chipmaker. That's, of course, after SoftBank makes a $2 billion investment. Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani joins us now. And Kunjan, you've put out a note along with colleagues really talking about how this would offer support, this potential stake, but it wouldn't close the gap with TSMC. Just talk us through your thinking.
Yeah, there's like positives of this stake. One, near term that it can help, but we don't think it's really positive long term for stakeholders. In terms of the near term positives, they get the 10 billion infusion. They get a signaling that the government is behind this, behind Intel, and so it might not fail as people have risks. And the third important point is we think, given the looming risk of the semiconductor tariffs up till 300% that's coming, the government could incentivize U.S. fabless semiconductors to bring business to Intel manufacturing, which could aid the company in lieu of getting exemptions for tariffs. So some positives near term, but long term, we don't think this is ideal for shareholders. First, you have the dilution. Second, most of this money would have come to Intel until last week, almost in the shape of grants, which they don't have to pay back. But now you have to give up about 10% stake for receiving the same money. So not great outcome for shareholders. And finally, like we said, this does not aid anything or change structurally anything from Intel to catching up to TSMC.
Isn't it interesting that the share price has been going up and to the right in reaction to basically money they were getting anyway, but maybe it was more of a profit share in the future? Tell us a little bit, though, about where they really need to close the gap from an innovation perspective. Is this really going to get them out there with a 14A?
It does not do anything. I mean, look, 10 billion is not going to make or break them getting out in the 14A, right? So that is an execution challenge that only the company can fix. This could depends on what what are the strings attached to this deal. This could even slow it down because now you have government on the decision-making seat driving some kind of decisions in that direction. So this does not do anything to close that gap when it comes to leading edge.
I mean, must be said, Howard Lutnick, Commerce Secretary, was saying we're not going to take a governance role here, but you can potentially, you're saying, estimate maybe there's more thoughts that the executives have to think through. More broadly, in the here and now, what do you want to hear from the CEO, Lip-Bu Tan? What's next?
Yeah, I think we want to see the same reassurance that the focus is going to be on 18A and 14A and how, like I said, the possibilities of those positives. Hopefully, we hear that and that encourages investors that deal will be positive in the near term. A is getting more business from U.S. fabless companies in order to get those exemptions from the tariffs.
We still await those tariffs. Kunjan Sobhani of Bloomberg Intelligence, we thank you for the analysis. Meanwhile, that does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. You'll find it on the terminal, as well as online on Apple, Spotify, and iHeart. So much more Intel news to digest. Currently the highest since April. This is Bloomberg Tech.